Hello everyone, welcome to my YouTube channel. This is Narayan Rao Kaur. Today, in this video, we will understand comparing the gross value added and gross domestic product. It is one of the important concept in UPSC examinations. So that is why we will understand comparing the gross value added and gross domestic product related to national income accounting. National income accounting. First of all, what is the meaning of national income? National income is the total market value of all final goods and services produced in a country during a given period of time, usually one financial year, is known as national income. Here, two important concepts. One is gross value added, another one is gross domestic product. What is the meaning of gross value added? Gross value added means value added by producers in the economy is called gross value added. So GVA is equal to value of output minus intermediate consumption. So value of output means sales plus change in the stock is equal to value of output. So change in the stock is the difference between closing stock minus opening stock. Change in the stock is equal to closing stock minus opening stock. Then you will get change in stock. So sales plus change in stock is equal to value of output. So GVA is equal to value of output minus intermediate consumption. Intermediate consumption means goods and services used in the production process. Goods and services used in the production process. That means expenditure on raw material, expenditure on electricity, expenditure on packing material, expenditure on telephone, expenditure on chemicals, etc. These are the examples of intermediate consumption. So value added by producers in the economy is gross value added. Gross value added is equal to value of output minus intermediate consumption. Next, gross domestic product, GDP. Gross domestic product means total value of final goods and services produced in a country during a given period of time within the country is called gross domestic product. So now let us examine comparing the gross value added and gross domestic product. Next, point number 1, meaning. Gross value added means value added by producers in the economy and value of output minus intermediate consumption. This is called gross value added. Whereas in GDP, total GDP, total value of final goods and services is called gross domestic product. Next, second one is focus. Gross value added focus on measures contribution of producers or sectors, measures contribution of producers or sectors or supply side or production side or income side. On the other side, GDP measures overall economic growth. GDP measures overall economic growth. That means focus on demand side or expenditure side. Next, third one is GVA at market prices. No, it is considered at GVA at basic price. GVA at basic price is equal to value of output minus intermediate consumption. Next, on the other side, at market prices, GDP consider yes. Fourth one, includes taxes and subsidies. So in GVA, excludes indirect taxes, includes subsidies. When we calculated GVA, we have to exclude indirect taxes, that is GST, and includes subsidies. On the other side, when we calculated GDP, it includes indirect taxes, excludes subsidies. Next, GVA formula. GVA is equal to value of output minus intermediate consumption. Value of output minus intermediate consumption. Whereas in GDP is equal to GVA plus indirect taxes minus subsidies. GDP is equal to GVA plus indirect taxes minus subsidies. Next, in the case of GVA, used by to assess sector-wise performance. GVA used by to assess sector-wise performance. Whereas on the other side, GDP is used by to assess overall economic growth. Overall economic growth. Next, seventh one, volatility. It frequently changes. Volatility. Whereas in the case of GVA, it's more stable. GVA more stable. But on the other side, so gross domestic product more volatile or more fluctuate. More fluctuate or more volatile. Next, eighth one, price basis. So GVA at basic price. GVA calculated at basic prices. GVA at basic prices. Basic price means value of output minus intermediate consumption. Next, whereas GDP calculated at market price. GDP at market price. Market price means market price is equal to factor cost plus net. Factor cost plus net. So market price is equal to factor cost plus net. Net means indirect taxes and subsidies. Next, so perspective. So in the case of GVA, perspective is what producers add in value at each stage of production. The perspective is what producers add in value at each stage of production. On the other side, so perspective in the case of GDP, what consumers or businessmen or government spends on. So that is called the perspective of GDP. So here, so these are the differences between or comparing between gross value added and gross domestic product. So very useful in UPSC examination. So thank you for watching. Like, share, subscribe and comment.